Which consumer finance stock is better, American Express or Visa? Let's take a look. Remember, these videos are not financial advice. I'm not actually going to give you an answer. The decision is yours. What investment is best for you, if any? Maybe neither. The real point of these videos is to walk you through the process that I personally use when I'm deciding whether I should invest in one company or another in the same sector. If you go right here, this is my website, and you click on the menu, which is right here, you will find these templates, which ETF is better, stock fight template. You'll also find a resource guide and a little post about dividends because there's a lot of misinformation about dividends. This is what the template looks like. It's fully clickable. The two websites that I use to do this research are Seeking Alpha and MarketWatch. And I've already filled in the template, so let's take a look at what we've got here. Both stocks are over $200 per share. American Express is $241, Visa is $280, and both stocks have a lot of growth. Although look at the 10-year growth on Visa, up 434%. One train of thought is, well, I should obviously invest in Visa because they've had the higher growth, which means it's likely that they'll continue to have higher growth. But remember, just because a stock went up a lot in the past doesn't guarantee it's going to go up a lot in the future. And do you see this stuff floating around in here? What is going on in my room? And sometimes people look to other stocks that haven't quite yet had that massive performance yet. And when you look at them side by side, up 430 whatever percent to American Express 169%, maybe there's a chance for American Express to then catch up and have more growth. American Express has a market cap of $172 billion and Visa is $557 billion. Both companies offer dividends and they're roughly the same. I mean, they're both very, very small, 0.75% for Visa, 1.17% for American Express. Look at the 5-year dividend growth for American Express, 10.46%, and Visa, 16.09%. The average price to earnings ratio for the consumer finance sector is 10.75, and you can see that American Express is 18.5, which means they're a little bit overvalued. But Visa is 28 times. American Express definitely has the higher revenue over the last couple of years. You can look at Visa right over here. I'll put it side by side. You can also see that Visa, however, has the higher net income at $17 billion to American Express's $8.31 billion. But total assets definitely go to American Express, $262 billion in assets, Visa, $90 billion. However, American Express has seen their debt kind of skyrocket in the last few years, whereas Visa's debt over the last few years really hasn't gone up at all. For cash and investments, American Express has $46 billion and Visa has $22.83 billion in cash and investments. American Express has $17 billion in cash flow and Visa has $19.7 billion. The 1-year price target for American Express is around 11% potential upside, and for Visa, it is around a 9% potential upside. Remember, this is according to the analysts. And this is the whole template all filled in, so you can pause the screen or take a screenshot and do some homework here. Which consumer finance stock would you rather invest in? Let me know in the comments. Thanks for watching. See you later.